The Bank for International Settlements, the BIS, is the single largest non-government governed institution that quietly clears global payments across borders. Every major currency, every central bank, every international transfer. And yet, almost nobody knows it exists. Because the truth behind the Bank for International Settlements is far stranger and far more dangerous than most people ever realize. Beneath its calm, technocratic exterior lies a hidden network of influence that has quietly shaped global money for nearly a century. And once you understand what the BIS really does, you'll never look at the global financial system the same way again. To understand the BIS, we have to step inside a world of power rarely seen by the public. A world where central bankers from the United States, China, Europe, and nearly every major economy meet behind sealed doors in Basel, Switzerland. No journalists are allowed, no transcripts are released, no elected official can enter. Inside this building, often called the Tower of Basel, decisions are made that quietly shape interest rates, money supply, capital flows, and even the strength of your national currency. The BIS was created in 1930 with a simple purpose: manage German reparations after World War I. But almost immediately, its mandate expanded. It became a hub for currency clearing, gold transfers, and secret communication between central banks, even during times of war. Its independence from any government became its greatest weapon. Its neutrality, its shield, its secrecy, its power. Over the decades, the BIS evolved into the backbone of the world's financial plumbing. Every night, through its payments network, money moves silently across borders, from New York to Tokyo, from London to Singapore, from Frankfurt to Shanghai, all routed through a system very few people ever think about. And the decisions made inside its walls ripple through the global economy, affecting billions of people who will never know its name. But long before the BIS became the cornerstone of global finance, subtle signals hinted at just how much influence it was accumulating. At first, these were small anomalies. Financial reporters noticed unexplained coordination between central banks in the 1960s and 70s. Interest rates in different countries began to rise and fall in suspicious harmony. Emergency lending between nations expanded quietly, without political debate. And gold movements, especially during crises, suddenly aligned perfectly across continents. Insiders whispered that central bankers were talking to each other far more than they admitted publicly, that behind closed doors, strategies were being aligned. That monetary policy was becoming global, long before anyone used that word. Most experts dismissed it. They said it was coincidence. They said financial systems were naturally becoming interconnected. But some analysts saw the pattern. They noticed that before every major currency shift, every large liquidity injection, every major financial stabilization, representatives from the BIS had been meeting privately in Basel. The world believed national governments controlled their own money. But these early signs hinted at something else, that there was a higher level of coordination, and that the BIS might be the quiet conductor. Then came the sequence of events that would expose how deeply the BIS was woven into the world's economic stability. The first mistake, the illusion of stability. Throughout the 1980s and early 1990s, the BIS promoted cross-border financial deregulation, free movement of capital, liberalized banking, light-touch supervision. Countries embraced it, banks expanded aggressively, credit flooded the world. It felt like stability, but it was built on fragile foundations. The second shock, the build-up to 2008. By the early 2000s, the BIS began issuing warnings. Quiet, technical reports highlighting dangerous leverage, excessive risk-taking, and artificially low interest rates. But governments ignored them. The global financial system was too profitable to question. The BIS saw the storm coming, but few listened. The third and final blow, the global financial crisis. When the housing bubble burst in the US, the shockwaves spread worldwide. Banks collapsed. Credit markets froze. and the entire global monetary system trembled. This was the moment the hidden machinery came into view. Central banks coordinated interest rate cuts within hours of each other. They aligned emergency lending. They executed joint liquidity injections measured in the trillions. It looked spontaneous, but insiders knew, weeks before the crisis hit, central bankers had already met at the BIS building. They had discussed potential collapse scenarios. They had drafted contingency plans. The public believed their governments acted independently, but behind the curtain, the real choreography had already been set. This is where everything snapped. In late 2008, global markets were in freefall. Banks stopped trusting each other. Corporations couldn't roll over debt. Currencies swung violently. Entire countries faced insolvency. The world watched in fear. And then, almost overnight, action erupted. Interest rates cut simultaneously across continents. Swap lines opened between central banks. Massive liquidity injections deployed. Governments announced coordinated stimulus. It looked like a miracle of global governance. But inside the Tower of Basel, this was the result of years of private discussions, secret modeling, and simulations of crisis scenarios the public never knew existed. During these weeks, the BIS was not simply clearing global payments, it was ensuring the entire monetary system didn't collapse. The crisis exposed something profound. The world believed every nation controlled its own monetary destiny. But the truth was that, in moments of chaos, the global system turned to the BIS. The Bank for International Settlements had become the quiet stabilizer, a guardian of a system held together by fragile trust and emergency coordination. And with each crisis, it helped contain. Its influence grew. But here's the part almost nobody acknowledges. The exact same pattern behind the BIS is happening again today. Interest rates across major economies have risen in near-perfect synchronization. Liquidity has tightened across borders. Banks have adjusted capital rules in unison. Digital currency discussions are being coordinated internationally, and emerging reports hint at preparations for the next global monetary reset. All of this is happening behind closed doors, in meetings the public never sees, at a table where no elected leader sits. The BIS is no longer just the bank for central banks. It is the architect of the world's monetary future. And if history is any guide, the decisions being made today will shape the next crisis long before the public ever realizes what's coming. Which brings us to the most important question. If the BIS quietly coordinates global monetary policy, what happens when a major country ignores those signals? Because that already happened once, in Japan. A nation that soared to unimaginable heights before collapsing into decades of stagnation. A mistake the United States may be repeating right now. Click on the next episode, Japan's Lost Decades, the mistake America is repeating.